So we had talked last time and over the last couple times discussing the idea of scarcity, how this is the economic problem, and it's scarcity that forces individuals to then make decisions. And we said that whenever we make decisions, we have to consider all the different trade-offs, right? That if we choose one thing, we can't choose another thing. But we said those decisions with the trade-offs, they have a cost. And this cost is known as our opportunity cost. Opportunity cost, as we talked about before, is just the value of your next best alternative. When you make a decision, making that decision has a cost. And that cost is what you could have been doing instead with your resources. Maybe it was your time, maybe it was your money. If you're a company, it's like your actual productive resources. Now, whenever making those questions, though, we say we have these opportunity costs, we have these trade-offs, we got to kind of also consider the question, well, how do we make those decisions? And we make those decisions through a process known as cost-benefit analysis. Now, cost-benefit analysis is when we see that our decisions are weighed by our incentives, right? We look at the costs of making a decision versus the benefits, and we weigh those out. And in weighing those out, it helps us make our decision. Now, we can sort of look at this like equation for the benefits that something provides, a decision provides, and we can look at that by just saying the total benefits minus the total costs are going to yield us the net benefits. Now, we sort of need to break this thing down piece by piece. So let's go ahead and start off by looking at total benefits. And first, we got to ask ourselves, well, what exactly is benefit? As we get into this course, one thing you'll see is that as we differentiate between consumers and producers within markets, it's also important to understand that benefit is sort of measured a little bit differently depending on who you're looking at. So for example, a consumer, since they are consuming these products in what we call like the product market, the satisfaction or happiness that comes from using that product is known as their benefit, right? If I drink coffee, the benefit I get from that coffee is the satisfaction or happiness I get from consuming the coffee. Now, if I go to a coffee shop and I purchase a coffee, I'm receiving benefit from that purchase. Now, at the same time, what we also see the producers, there's a benefit for them for selling that coffee. Right? So they have some sort of satisfaction, happiness, whatever benefit is from producing and selling that coffee as well. Now, how exactly do we measure that, though, for each of the consumers and producers? For the most part, with consumers, we will use something known as utility, which is sort of this imaginary measurement of happiness. We'll typically measure it in something known as utils, but utility is just this very general term for the benefit something provides. Oftentimes, it's a little bit easier for producers because we can measure the benefit they receive from producing or selling something in currency, right? We can look at a producer's revenue, the amount of money they earn from selling some good or service. So whenever I go to a coffee shop and I purchase a coffee, they can measure the value that they get from selling that coffee because I paid them however much money, and that's the benefit they're getting. Now, what benefit do I get from consuming that coffee? Well, yeah, we can measure that in utility, and in some senses, we can actually measure it in dollars. Like I can look at, walk into a coffee shop and say, oh man, like I need to wake up this morning. A coffee is worth like $5 to me right now. So we can kind of measure the benefit something might provide us in money, but more generally, we'll use utility for consumers. We then also want to look at the total costs of making a decision. Now, one thing we need to understand when making decisions and with these costs is even, as we consider costs as a whole and looking at opportunity costs and all that, we do have to look and see that there are explicit costs and what we call implicit costs as well. Explicit costs are costs that require you to actually spend money. Right. And so for maybe going to my coffee shop example, like when I make the decision to purchase coffee, I am spending cash. And so there's an explicit cost to get that coffee. But at the same time, there's also an implicit cost. And maybe for me, right, it's the cost of the resources that could have been used for something else. My implicit cost is by getting that coffee, I'm unable to have tea in the morning to wake me up instead, or a soda to wake me up, some other caffeine. And so when we look at total costs, we do need to understand that total costs are the sum of both our explicit opportunity costs and our implicit opportunity costs. Another example we can look at with this is thinking about college, right? If you think about going to college over the next 4 years, one thing that you often do is weigh the cost of attending college. But once again, we have explicit opportunity costs there and implicit opportunity costs. I think people are pretty good about thinking about those explicit costs, the ones that require you to spend money, right? You look at the next 4 years of college and you're like, okay, over 4 years of college, it might cost me $80,000 in tuition. It might cost me, $60,000 for room and board, another $10,000 just for books and other miscellaneous things. So here I'm looking at $150,000 to go to college. But keep in mind, there are also implicit costs, because by going to college for those 4 years, you're giving up the opportunity to be working full time for those 4 years, right? So maybe you look at it and you could have been working a 40-hour job, say at $15 an hour. So that's $600 a week times 50 weeks throughout the year times 4 years. That means you're also giving up the opportunity to be making $120,000 as a full-time job instead of going to college. So whenever you look at this, we have to look at both the explicit and the implicit opportunity cost to understand what is the full opportunity cost of attending college. Well, again, it would be that $150,000 plus the $120,000 to find out that our total opportunity cost is $270,000. Now, finally, I want to take a look at the net benefits, right? Because the net benefits is the overall result. And if we look here at this equation, right, total benefits minus total costs, we understand that net benefits could end up being positive or negative depending upon the relationship between total benefits and total costs. So if that net benefits is positive, that must mean that the total benefits of doing something is greater than the total costs, because when we subtract those, we're left with a positive number. Now, if total benefits is less than total costs, that must mean that we have a negative net benefit. Now, whenever we make decisions, we really talk about in economics, like we're rational people, right? We assume that we are rational people at least. And so what that means is when we look at a decision where the total benefits of that decision are greater than the total cost, we would say that, hey, if we're rational agents, we will perform that action, right? Because we look at it and we say, hey, the benefit of doing this thing is greater than the cost of doing this thing. Therefore, it's a reasonable thing to do. We have positive net benefits. Like as a net outcome, we're going to be better off. Now, if we were to look at a situation or a decision where we weigh the costs versus the benefits and we see that the benefits are less than the costs, well, rational agents aren't going to perform that action. We will not perform that because, once again, the cost of doing it is going to outweigh the benefits of doing it, and therefore we're at a net loss there. We're actually worse off. And so, you can look at that and think, hey, what are the total benefits, total costs, and net benefits of coming to school today? And you could kind of sit there and go through what are your benefits of being at school, what are the costs of being at school. But really, when it comes down to it, we're going to assume that, hey, since you showed up to school, right, there must be a total benefit that is greater than the total cost of coming to school because there's a positive net benefit. And as a rational person, you ended up coming to school. Now, does that mean then, though, that any choice we make is best as long as the total benefit is greater than the total cost? Well, let's look at an example. Let's suppose that we produce and we sell bicycles. Now, obviously, there's going to be a total benefit we receive from selling bicycles, right? We earn money from selling different amounts of bicycles. There's also going to be total cost, though. Like we have to pay money in order to produce those bicycles. And so then we can look at the net benefit of producing and selling the bicycles by weighing that benefit versus the cost. So let's say we produce anywhere from 0 up to 5 bicycles, and maybe suppose we sell each bicycle for $200. And so we can see that our total benefit is going to increase by $200 every time, because obviously if we're selling 0 bikes, we're earning $0. But for every additional bike we sell, we earn $200. Now, when it comes to costs, maybe we see that we have varying costs. Even when we don't produce any bikes, maybe we still have some overhead. We have a little shop that we rent out, so it's going to cost us some money. And we have these increasing costs that we see as we go throughout. So if we start to look at the net benefits along the way, right? Look at the net benefits. First of all, we have 0 minus 200 gives us negative 200. 200 minus 250 gives us negative 50. 400 minus 350 is positive 50. 600 minus 500 is 100. 800 minus 750 is positive 50. And 1,000 minus 1,100 is negative 100. So we had said that it's a rational decision to do anything where our total benefit is greater than our total cost. And we actually have 3 different situations there where that's the case. Now, what we need to understand, though, is that while any of these choices might be rational, they're not necessarily optimal, right? Because we can't produce 2 and 3 and 4 bikes. Like, we can't do all of those. We have to make our decision about, okay, well, how many bikes are we going to produce? We're going to produce 2, 3, or 4. All of them have positive outcomes, but which one is optimal? And so what we find out is that the optimal choice is the option that provides us with the greatest amount of net benefit. Now, keep in mind, some decisions we make are they're all or nothing decisions when it comes down to it. Like, we have to look at the total cost versus the total benefits. We'd already sort of looked at that example of like getting a college degree versus not getting a college degree. Typically, you commit to all 4 years to get the degree versus not going at all to not get the degree. But we see that's not always the case with our decisions, and it's actually not always best to make decisions as all or nothing decisions. Within economics, we discuss making decisions instead at the margin, as we call it. And when we say the margin, what we actually mean is that typically decisions are best made when we look at the change in something, like additional or incremental. And that might be the cost, the additional cost, or the additional benefit, right? And so whenever we look at decisions as a whole, oftentimes it's better to not look at it as one big decision, but rather as incremental or additional decision, like a series of small decisions. Because by breaking it down, we're able to be more precise with what is our best option. If you think back, we had talked about a decision we had made of should we spend time hanging out with our friends or should we spend time studying? And we saw we had all these different options about how to spend our time. Now, suppose that we had chose point A, right? Like, we chose point A where we're going to spend 5 hours studying and no hours with our friends. Now, again, if you want to hang out with your friends, is this an all or nothing decision? Like, where you either have to spend all 5 hours studying or all 5 hours hanging out with your friends? And no, it's not the case. Like, we can actually make our decision better if we split it up and look at it incrementally. It's not just from 5-0 all the way up to 0-5. We can start making our decision by thinking at the margin. We can apply this thing called the marginal principle. We can break down our big decision about how to use our time incrementally. Break it down into a series of smaller decisions, like, hey, should I hang out with them for 1 more hour, right? Like, should I hang out with my friends for 1 more hour? And then how about another hour? How about another hour? Rather than looking at it as one big decision. And then we can also use that cost-benefit analysis by applying that cost-benefit principle, where we see that, again, our decisions are best made whenever we weigh the cost versus the benefits. Now, when we combine those two principles together, we're able to apply marginal analysis and make the best choice possible for us. Because whenever we do that, whenever we look at both the cost-benefit principle and the marginal principle, we can help make a best decision. And we do that by looking at, first, what is the marginal cost of our decision, right? So suppose we want to spend 1 more hour hanging out with our friends. Well, what is the cost of doing so? But at the same time, we understand that we want to hang out with our friends because there's some sort of benefit that comes along with it. So what is the marginal benefit of hanging out with our friends? And we do that for every single hour along the way. And by doing that, we're able to best make the best decision by looking at our decision in a series of smaller decisions, weighing the benefits versus the costs.